Why I'm not a fan of the infinite banking, the bank on yourself method. Just listen to my man Mitch Howard or Dave Howard, something like that. I like him. I like his videos. I like his he just seems like a fun guy. I like him. Seems like he's a pretty righteous dude. The problem with this concept, and he says it, what's the guy's name, man? I don't know if I can go here. Will it still let me? Doug Andrew, that's his name, Doug Andrew. All right, cool, Doug Andrew. I don't know where I got Mitch Howard, Clark Howard, Dave Andrew, Doug Andrew. His name is Dougie Fresh Andrew. I like him, I like his spunk. I don't watch too many of his videos just because, frankly, most financial planning videos bore me, to be perfectly honest with you. But his came up on my feed today. But infinite banking, be your own bank. So let me check it out. He says explicitly, he says max funding your life insurance. Max funding your life insurance. All right, so basically the premise is you take a whole life policy, not a universal life policy. I'm telling you right now, we don't want a universal life policy. And you fund that puppy, and you have $1 million of cash value, which you can borrow against it to, in his example, to build a condominium or build a real estate venture or something like that. He's using an example of that. And what happens is you have that money loaned out. So you got $1 million, you borrow $500,000 against it. That $500,000 is costing you 5% a year, whatever the interest rate was. He just used 5% as an example. All right, but you're still being credited with the entirety of the $1 million. Now, you gotta be very careful here. My man Rich is involved in some of these programs, and a lot of companies don't do this anymore, just FYI. They don't credit your interest rate as if you still had $1 million cash value. So you gotta be careful here. In fact, I bet there's very, very few companies who do that anymore. I cannot stress this enough. So you have $1 million of cash value. You borrow $500,000 of that cash value. For simplicity, the $500,000 is cost you 5% a year in interest. We're just gonna say that. That means it's cost you $25,000 a year in interest. The crediting rate for simplicity is 5% as well, all right? Probably won't be quite that clean, but we'll just use it for example. All right. You are still being credited as if you had $1 million cash value in your contract. So you're paying $25,000 to the insurance company. You're getting $50,000 on your cash value because we're going to say the crediting rate is 5%. They're still crediting you as if you have $1 million. But you don't. You only have $500,000. And that's where the insurance companies kind of wisen up probably 10, 15 years or something like that ago and said, whoa, what are we doing? We're not doing this anymore. And again, some insurance companies might still do that. Probably mutual companies. I tell you, in the age of lower interest rates environments, Northwest Mutual, I don't know. Mass Mutual, I'm not sure which ones. But generally it'd be a mutual company that does that if they're still doing it. But if you're not getting that same crediting on the $500,000 as if it was still in the account, then this kind of thing doesn't work that well, right? Because now you've got $500,000 out that you're paying $25,000 a year on. You got $500,000 left in the contract that you're getting $25,000 a year of interest, and it's not that simple. They're never going to, I should say never. Most likely, you're going to pay more interest than you are on your loan than you are getting as a crediting rate, if that makes sense. I mean, insurance companies aren't stupid. They got to make money. So now let's just, in that example, you're breaking even. You're paying $25,000 a year in interest. You're getting $25,000 a year crediting rate. All right. And so in that case, you're like, well, that's still, it's better than paying the bank. And it is. I 100% agree. It is better than paying the bank. Now, if something happens, if you die with a significant cash value loan outstanding, could be some pretty significant tax consequence on there. What do you got to do to pay the money back to keep the life insurance solvent? There's some pretty significant issues there. You see what I'm saying? So we got to make sure these life insurance policies stay solvent, or else there can be some significant tax hits. People don't recognize that. I'm like, off the top of my head, I can't remember what it is, but it comes out of, you get taxed as ordinary income if you don't die with a solvent life insurance. And there's a lot going on that you have to dive into that a little bit yourself. Maybe one of these days I'll dive into that. It's been a long time since I talked about these policies, years. But anyway, so in of itself, you're like, man, that sounds pretty good. And it does. what's the name? Dougie B. Fresh Andrew? Yeah, Dougie Andrew, Dougie Fresh Andrew. It does sound good. Except for what Doug said, the max funding problem. And this is the issue that most people overlook. Man, if you got money, you should absolutely, and you're in good shape, and you're younger, 100% do a whole life insurance policy and max fund that puppy. 100%. You got to be careful in meching the contract. If you mech it, it's like an annuity essentially. Anything you take out comes out as ordinary income. It's last in, first out. So you just got to be careful. When they say max fund it, it's got to be set up initially the right way. You can't just have some Joe Schmo do this for you. You want an experienced guy to do this for you, just to make sure you're not meching it. Mech is a modified endowment contract, and what that simply means is that means you put too much money in the contract to make it qualify as a life insurance component, which means you can't borrow against it. You have to pay. It's basically like an annuity. It works just like an annuity. You take your cash value out, you got to pay as life last in, first out. So you got to pay income tax on the amount you borrowed, if that makes sense, up until your return of principal, your basis. See, it's very complex. That's why you want a guy who knows what the hell he's doing. I imagine Dougie B. Andrew is that guy, frankly. My man Rich Shaga down in Mass Mutual in Louisiana, he's that guy. You don't want just some schmuck doing this stuff for you. But man, if you got money, cash flow, it's tough to beat these policies, man. Certainly not a scam, as Dave Ramsey says. Certainly not a scam. Tax-free death benefit, tax-free accumulation of cash value. Again, the problem is max funding. So let me give you an example. The last couple of years, I made bank. No other way around that. I appreciate y'all being here. And if you like what I do here, you want to buy me a cup of coffee, it's in the doobie-doo. Of course, sign up for the email list. We're going to do our Gen X webinar Ventada. That means tomorrow for you non-native Spanish speakers like me. I want to be a Mexican. I got to remember the name of that band. So I'm from Mexico, so we speak Spanish in Mexico. I love you, my Mexican brothers and sisters. Mexico crushes. I love Mexico. I'll never live there because I got a American flag tattoo on my shoulder, and as such, my hermanos and hermanas in Mexico, they won't take kindly to your buddy Josh. But man, Mexico is pretty cool. But the cartels, oh dude, you sound like the people who think America is so violent. Stay out of Troy Street in Atlanta, and you're not going to be murdered. Stay out of, it used to be Anacostia on 295 in Anacostia in D.C., and you're not going to be murdered. Don't freaking do heroin with fentanyl in it, and you won't die. Pretty simple stuff here, man. Obviously, the reason why people are getting type 2 diabetes is because they're living longer than they probably ought to, given their diets. They're certainly not getting killed in this street. Anyway, so people think, America's so violent. Just idiots say that. You know, Mexico, you're going to be fine, man. Well, you saw a story. You're like my wife. I saw a story of danger. I was like, ugh. Yeah, and you see 1,000 stories of danger in the United States. But that doesn't mean it's a dangerous place to live. I mean, Mexico's got, what, I don't know, 50, 60, 70 million people. You know what I'm saying? So, anyway. Going back to this right here. I forgot what I was talking about. All right, so the people, well, I even get off the tangent of Mexico. I can't remember. But anyway, Mexico crushes. But anyway, so the problem with max funding your life insurance. Oh, yeah, your old buddy Josh was making bank the last few years. You know, I'm healthy. I was 50 when I was first started this business. I was 47. First year, I didn't make crap. Second year, I started making money. Third year, that's where I started taking off. And again, 3 years, if you can hang for 3 years, you're probably going to be okay financially. And if once you start being self-employed, you're not going to be financially okay the first year, maybe a little bit the second year, but generally the third year is when it's either going to make it or break it. No other way around that. If you've given an enterprise 3 years, and after the end of year 3, it's still kind of falling apart, yeah, that might be a time to call it a day. But you have to figure that yourself. But anyway, so going back to max funding. So I could not afford to max fund a life insurance when I was 47, when I was younger and healthier than I am now. And the reason I'm not as healthy now is because I'm older. I'm more likely to die. Because the older you get, the closer you are to death. Shocking. And your life insurance is based on underwriting your health status, your age and your health status. I guess it's not racist according to that silly group, the American Medical Association, to say BMI, but they used to use BMI. BMI is kind of silly anyway. I mean, I remember when I was in my strongest days, when I was nearly 1,000-pound club, my BMI was through the roof. Body mass index, because I was freaking big and I was strong. I was benching freaking 275, deadlifting, squatting with three is 225, 315. I was squatting 3 over, so I had 345 pounds on each side plus a 25, whatever that is, 370, 85, something like that, 365. And I was deadlifting 315 as well. Yeah, it was 135, 225, 315, that's what it was. And I was getting close to the 1,000-pound club, which my stinking brother just hit, by the way, because I inspired him. Yeah, great, Ben, great. I inspired you with my freaking rotator cuff getting burnt out. And now when I get back under the bar, you know, you want to be able to bench your weight. But I got some new Apple iPods here. Hopefully y'all can hear this. If not, I'm just rambling. You want to be able to bench your weight. My weight's 185, so I get, you know, four sets of 8 on 185. Should I put it up to 225? Sure. What happens if I put it up to 225 and my left shoulder starts to get a little bit hurt? I'm not trying to get another freaking rotator cuff injury though, even though it is very alluring to put more weight on, because you like it. It's like you know, you're challenging yourself. The problem is I don't want to freaking bust my shoulder, because that hurts, dude. When your rotator cuff smashes, it hurts. Woo, does it hurt. Anyway, so going back there. So first year I wasn't making money, so I couldn't max fund my life insurance because there was no money to put in there. There wasn't any. I was taking money out of my 401k to fund my business. All right, year 2, a little bit better. Year 3 is when I should have done it. But the problem is when you're self-employed, you don't know how long your income is going to last. You don't know if you're going to make that kind of bank each and every year. This is the problem with the wealth inequality people. I mean, there's huge. I mean, we absolutely need to be taxing the upper echelon, you know, the 0.1%, taxing them more, 100%. But if you're making $300,000, you are in the 1%, dude. $400,000, you are in the 1%. And if you're a corporate stooge making $400,000, right out the gate, 35% is going to of your total is going to taxes, FICA, income tax, the feds, and income tax your state. So you're now down to, what's that, 265 or so. All right, so, you know, let's just say you have a nice mortgage. You got to put some kids through school, whatnot. Again, I don't like all that, but let's just say you did that for a life insurance, the human life value of life insurance. I don't like it, but just say you did. You're going to have a pretty sizable life insurance before all that. You know, make sure the house is paid off upon your death, your wife has some money left over, whatnot. All right, for a whole life policy, on we'll just say a $2 million life insurance, that premium is going to be freaking high. We'll say $50,000 a year, probably even more than that, actually. But let's just say $4,000 a month. Now, premium is like the extent of your mortgage, if that makes sense. All right, so you're making $400,000 a year, but you're only netting $265. You got a mortgage at $4,000 a month. You know, you got all this other crap. Next thing you know, you got $4,000 a month going to a whole life policy to max fund that puppy. Dude, that's pretty expensive. Let's say you get laid off. Let's say that you're self-employed like me and business slows down. Like I had a slowdown back in from the end of March to the end of April. It slowed down significantly. And I was like, ugh, people don't like me. I said something wrong. I guess they really got upset with me about my take on the moon landing. But anyway, so it's dog watching. When things start going south, the first thing you're going to give up is max funding your life insurance. That's why banks always charge you more in interest on second homes, because they know when things go south, the last thing you're going to do is pay your mortgage on your vacation home, because your first home is your priority, because that's where you lay your head at night. Your vacation home is nice, but if you don't have the scratch for it, you're going to say, I'm sayonara, or as we say in Hawaii, aloha. You know what I'm saying? Or as we say in Vietnam, because again, I'm multilingual, didi mao. How would you say goodbye in Arabic? If anyone knows that, I'd like to hear that. How do you say goodbye in Arabic? I was watching this guy's video on how to count to 10 in Arabic. I thought it was pretty interesting, actually. Oh, you're becoming a Muslim? No. but I do have an appreciation of our Muslim brothers and sisters that I did not used to have when I fell for the, we got to get them over there before they get us over here. Again, man, if you can't see the difference between Muslim brothers and sisters and atheists, I don't know what to tell you, man. If after the last 3 years, 57 flavors, lockdowns and all this crap, if you can't see a difference between who's on your side and who's not, I got nothing for you, man. Muslims aren't our enemy. Trust me, I used to think so too. Trust me, I'm freaking guilty as charged of that. It's embarrassing, actually. Then we got people of the Christian faith who think the Catholics are our enemy, or the Protestants, or the Mormons. I'm like, it's so freaking stupid. We are like, Muslims and Christians are aligned about like this. Atheists and Christians are as wide as the Pacific Ocean in terms of worldview. And yet we're going to go after the Muslims who are relying, my hands are dirty, I was in the garden, sorry. We're going to go after the Muslims because they don't believe that Jesus is a savior. I mean, come on, man. The Muslims still believe in Jesus as a prophet. Yeah. Oh, it's nuts. And the atheists, though, they're freaking, ugh. If you haven't figured that out after the last 3 years, man, I got nothing for you, man. I'm like, dude. But Josh, don't you know the ISIS? I'm like, so you can talk ISIS all day long. What's happening right now in our own country, though? There's no ISIS taking over, and yet our own atheistic government and its purveyors of the corporate elite, the fascists that we run the country, are hurting us a hell of a lot more than ISIS coming here. That's a doggone fact. But don't you see what they're doing in France? Okay, well, is that Muslims or is that just scumbags? You know what I'm saying? I mean, just because they come from Algeria or Morocco doesn't mean they're practicing devout Muslims. Christians have tons of scumbags too, man. Crazy. Yeah, get over the Muslim stuff, man, because it's the Muslim attitude towards Muslims. It's not godly, frankly, in my opinion. But anyway, so let's keep going. So now we're on our backs. We got no money. How are we supposed to max fund that life insurance policy? Well, we can't. All right, so now what happens to the life insurance policy? Well, if you don't put money in there, it's going to freaking lapse. And what happens when it lapses? Again, we talk about the tax consequences and all this. Now, what you can do is you can reduce the death benefit 100%, and that'll reduce the premiums. You can do that. You don't have to get underwritten to reduce the death benefit. But even if you do that, that kind of defeats the purpose of the max funding life insurance for a bank on me now, doesn't it? Yes, it does, sir. Yes, it does. And so it's kind of like when you have a 15-year mortgage. Why would you do that? You're locking in yourself to a payment on a 15-year mortgage. And I thought about doing this too about 15 years ago we moved to Texas. Charlotte's like, nah, man, let's just do it for 30-year. If we need to pay it over 15, we can. We just pay more. The interest rate wasn't that different. I said, good call, babes. Good call. Anyway, so that's the drawback. You don't want to lock yourself in with a massive amounts of obligation because things could go south. I know, it sounds good on paper. And Dougie Andrew said John, his real estate guy, had $1 million in cash value. He neglected to say how much he had to put into that on an annual basis and how he was able to do that if times got south. Now, sometimes it might not go south. If you got a pretty sick, great gig, or let's just say you got $1 million in cash just because you've accumulated $1 million in cash from the sale of a home or something like that, man, doing a freaking whole life insurance, max funding that's a great strategy. But to do it from cash flow, salary, or your own business income, no, I would not do that. But anyway, love your thoughts. Again, if you got questions, put them in the show notes, comments, concerns. You got jibes. I'm here, baby. If you saw this all the way through, you are the man. I don't care what they say about you out there. You are the man. See you.